if a business tax return can be audited, and I've been schooling you guys this on for years, that it's not just a tax return that's impacted, it's layered, okay? You see the news, because I see the news, and I know you want me to talk about it. So let's get into it. Hey guys, welcome to another episode of You See the News. I'm your host, Folasade, the Accountability Accountant, guys, and I'm so excited to be with you guys to talk about the news, because I know you've been seeing the news, because I've been seeing the news, and I know you guys have been actually waiting for me to talk about the news. It's been a while, guys, so forgive me. So guys, if you like the video, please like the video for the YouTube algorithms, and if you are not subscribed to our YouTube channel yet, please subscribe to our YouTube channel as well. So I'm like so pumped up, guys, because it's been a lot. I know I have been behind, but we're gonna move on, right? So Tyler Perry, guys, is in. Okay, so everything in this video, let me do my disclaimer. Everything in this video is alleged, in my opinion, and also I'm utilizing a fair use clause. So yeah. All right, so everything that I'm talking about, guys, is my opinion and alleged. All right, so Tyler Perry is in the news about him firing his accountants. Okay, so Tyler Perry fired his accountants because he had ended up getting audited. And come to find out, after the audit was done, the IRS owed him $9 million, y'all. And I'm, going to give my perspective on things, because I handle a lot of audits. And from my experience, guys, that can happen. Courtesy to the Shade Room, it says, hello, unemployment office. Tyler Perry recalls time he fired entire accounting team after discovering the IRS owed him $9 million. So Tyler Perry was at the InvestFest 2022 with Earn Your Leisure, and he said on stage, okay, it says the filmmaker and philanthropist who had been on the receiving end of an audit shared the story at the 2022 Earn Your Leisure conference, where he discussed his career journey and some of the challenges he learned from doing along the way. So this audit went on for 3 years, Perry said. And guys, when you make a lot of money, that can happen. When you're in the upwards of millions and millions and millions of dollars, your audit can last for years. Okay, your audit can last for years. It says, so this audit went on for 3 years, Perry said. I'm spending hundreds of thousands of dollars in accounting fees with accountants for the audit, and I'm getting so mad and so frustrated. We get to the end of the audit, and the IRS owed me $9 million, he shared. Perry went on to say that the team of accountants were thrilled to inform him that the IRS actually owed him $9 million, to which he responded by, and it says, go and check out the full video. Okay, y'all. So without checking the full video, and I'm going to go and check out the full article, but I am going to go check out the full article. From my experience with doing audits, it is not abnormal for the IRS to end up owing taxpayers some money. It's not abnormal because there's so many layers of accounting, especially when you're doing business on the caliber that Tyler Perry is doing business, guys. So let's put this in context, okay? So there can be, if a business tax return can be audited, and I've been schooling you guys this on for years, that it's not just a tax return that's impacted, it's layered, okay? So here we go. So because Tyler Perry Studios is huge, okay, there's several different financial divisions, okay? So you have the payroll department. So if the payroll department misreported something and didn't tell the bookkeeping department so they can make the adjustment on the books, then there will be a deficiency, okay? So you have the payroll division. If the payroll division make mistakes on reporting of any sort, then it could impact the bookkeeping, okay? If each individual division reported something incorrectly, then it can impact the overall bookkeeping for that particular division. Okay, so that means either income was higher or expenses were higher or expenses were lower and income was higher, whatever the scenario, something was misreported. Okay, so you got the bookkeeping department and you got the payroll department. All right, so then you also have the tax department. So the tax department is the one that more than likely end up filing the tax returns, and they ended up getting all of the data after the fact, and they also have to rely on the internal team to report things, track things, and everything to really maximize your taxes. So bookkeeping is one part of it, but you also supposed to go deeper and say, okay, well, based on how the businesses are structured, based on the employees, based on revenue, based on all of this, what additional things could we deduct? However, here's the beauty. Sometimes when you're audited, and this is how you end up getting a refund when you guys are audited. When I represent clients, I first review everything. I end up coming up with my own number, okay? And I think I said this in a previous video. But once I come up with that number, if I see that they missed some deductions, missed some credits and things like that, then at that point, that's when I would then direct the client to start searching for all of these expenses, the record behind it and everything, and then also do an adjustment on the books and present that number inside of the audit. So a lot of times the audit give you a second chance to include expenses that were left off of the tax return. Okay, so it really depends. So if Tyler Perry fired the previous accounting firm, that can be, kind of drastic because it's so many layers to things. Unless they didn't strategize, unless they misreported something that was given to them, unless they outright made mistakes, which we don't really know being on the outside if they really made mistakes, or was it internal mistakes, the different divisions, or the reporting, the management. Because when the bigger your company, it's not just the bookkeeping, it's what are the employees reporting, what are the managers reporting. All of that rolls into one file or one series of transactions from that division, and then you have this division and this division. So it just really depends on how much things are separated. And in accounting, you want separation of duties. You want to have strong internal controls so you can have separation of duties so that not one person can really cheat, steal, or do any type of fraud or really commingle with anybody else. So it really depends with Tyler Perry. Yes, he fired them. Might be a good thing, might be a bad thing. But with this accounting stuff, remember, guys, taxes is after the fact. Everything you do in your business throughout the year leads up to the taxes, okay? All of your expenses, if not properly reported, strategized, or tracked, it's going to be missed on the tax return. So did Tyler Perry accountants miss expenses that should have been claimed on the tax return? Did the accountants not take any tax credits that they could have taken on the tax return? So we still have a lot of questions. So guys, if you enjoyed this segment of You See the News, please like the video. And if you're not already subscribed, please subscribe to our channel, guys. We have so much exciting stuff and content in the future. I'm excited to bring some good content your way. So let me know, comment below, give me your opinion. Do you think the accountants really messed up, or was it internal? Let me know. All right. See you later. Bye.